posted something about ENPHASE that you're like, oh, I'm doing some due diligence on it now. It's because it's tanked. So I'm curious. This was 2 weeks ago, I think. What have you discovered in your 2 weeks of due diligence?
So yeah, ENPHASE. It's an interesting company. It had a great couple of years, but now even with the crash, I talked about this with Vince as well yesterday. Actually, there's still a lot of risk in the short term, not for the future of the company that's going to be doomed or something like that. I think solar penetration is still very, very early days. But hearing what the company has to say, management, I mean, near-term headwinds, it's a given right now. So why chase? Because you're going down. You could have bought it, I think, in May. Yes, you went up until July or something like that. You were up 25%. Most people will be probably happy. Then you had the earnings report, bad guidance, bad report, or weak, should I say. You're down another 30% or so. So good products, good roadmap, in my opinion. Just high interest rate environments right now. Like they said, it's going to impact the business in the short term. I rather wait to see positive momentum return for the company than start chasing it just because the price is low. But me personally, I'm not going to open a position because I still believe that Tesla Energy is my energy play. I'm not going to say that they're taking the whole market. I'm just saying that my energy play is going to be with Tesla.
Yeah, if you have Tesla, you don't need ENPHASE. That's what you're trying to say.
What do you think of the let's say a counter argument to that, where if say, because it's affecting everybody, it's affecting the high interest rate environment will affect any company that does solar. So it's going to affect say SolarEdge and ENPHASE equally, the two biggest players. What do you say to the fact that if they're citing that as really their only headwind, then what you're getting is an artificially low stock price right now to be able to DCA in this environment, and the day that the Fed either announces further pauses or some dropping of rates, then a lot of that pent up tension, those people that want to buy solar will feel more comfortable doing so, and basically the floodgates open. It's sort of like what we're talking about in the housing market, right? People are just holding on, waiting for rates to come down, and we know that they have to come down at a certain point. So if it's another year, it just gives you say a year to DCA in your position. If you wait until the rates change, until they announce the rates, unless you've got a boatload of cash ready to go right away, you're probably not going to be able to get as big of a position. What would you say to that if you believe that the fundamentals of the company are strong?
Yeah, no, it's the same argument that Vince made yesterday. I agree, but again, I don't mind waiting. And even if the stock jumps on that announcement of the rates coming down, you still have to see the financials of the company become much better.
Yeah,
because management saying that it is interest rates and it actually be only interest rates are two things. It can be interest rates, it can be something else as well. Remains to be seen. I mean, we've seen this with the auto industry as well, right? Financing your cars is not optimal right now, but we'll see. I mean, we are in the financial space, so we follow the rate cuts, etc., etc. I highly doubt that the normal person follows everything like we do. So even if
they follow you
cuts,
on Twitter and if they watch Finance Junkies Daily, they know.
I hope so.
So to connect it to Tesla has a similar situation selling expensive cars, at least for now. Maybe in a couple of years they won't. Rates are obviously affecting them as well. They've been cutting, into their gross margins, etc. So are you still DCAing into that, or no? You've even stopped DCAing into Tesla because it's not worth it right now because of this rate thing that's going on?
So with Tesla, for me to be adding more, it has to drop a lot more than other companies. I did add, I think, a week or two ago when it dropped a bit closer to 200, not a lot, but it has to drop more than the others. And with Tesla, again, they cut prices, but still have industry-leading margins, although maybe this in Q3 we're going to see it a bit lower. Remains to be seen. But on average, their cars are cheaper than the average price.
On their website, $29,750 for a brand new Model 3 with incentives and the gas savings, which are real. And that's the cheapest car. That's cheaper than other companies' entry level sedans at this point. So I do have one point to make, because you were talking about how Tesla is your energy play over ENPHASE. One thing that does worry me as an ENPHASE investor as the longer that the rates stay low and the longer that ENPHASE cannot continue to capture market share right now in this
Stay
environment.
high or stay low?
High.
I'm sorry, stay high. As long as the rates stay high and people aren't installing solar and ENPHASE is not capturing that market share right now, it does concern me that as Tesla ramps, my big concern or a big concern long term for ENPHASE is that Tesla turns on the spigot and actually really starts to push solar. And I think that there's a lot of levers that they can pull because it's not the primary focus of their business to incentivize people to get solar, whether it's just lowering the prices and selling them at margin and finding a way of making money on the service part, whether it's energy arbitrage, making more money on batteries, or like KRIS had said, they mentioned that maybe they do a bundle deal where if you buy a Model 3 and solar, we'll give you one deal and you pay one price per month. There's a lot of ways that they can get people to buy solar, and that would concern me. So the longer the rates stay high and ENPHASE does not go capture that market share, the greater that there's a risk of that happening. And if Tesla does do that, although they might not take the majority of the business, and still most installers will probably install ENPHASE number 1 and maybe SolarEdge number 2. It does concern me that growth that we're expecting long term might not happen. I just think they're a sleeping giant that's not really.
I think you would be right once again if the penetration wasn't so low. If we were at like 90% penetration, I think these companies would have to worry about Tesla coming in and eating their lunch. But I don't think Tesla can supply, and we can see they can't supply. They can't even supply the cars with the battery. So they just can't supply the demand that's going to be out there and growing. So like we think in such small numbers, like remember me and you did an episode, there's 80 million plus single family homes alone. Forget about dual family, multifamily.
Yeah,
and we have
100 actually.
And we over 100 million, whatever.
100
My
million,
point is like, and only a few million of them technically have solar. Like there is so much penetration left that I think these three major, basically monopolies, in my opinion, Tesla, SolarEdge, and ENPHASE are going to grow massively into this market. And then at some point when they reach 50, 60, 70% penetration, then there's a worry. But by then I think we'll be done. We'll probably be retired, I would suspect.
I would hope so. I mean, that's what's yet to be seen. I think we all know that 10 years from now, this conversation is going to be very different.
Oh yeah.
The exact path that it's going to take to get there, I don't think anyone's sure about.
That's when our mom is going to say, hey, should I buy ENPHASE? And we're like, okay, time to get the fuck out of ENPHASE.
Yeah.
The contrarian pick on solar is actually Google, because they announced today they are selling Google Maps data to solar companies to be able to optimize how those companies can sell solar panels.
Most of those companies have a solar calculator on their website where you put your address in and it sort of takes.
Look, I'm just saying Google said they want this to be $100 million per year business. So if you're interested in solar.
No, so what you just said was not that Google is coming for their business, but Google is going to help them do their business more efficiently.
Yeah. And by the way, all the installers, so I don't know if you've been following my tweets, Neil, but I've been talking to a lot of installers and I'm actually getting a new upgrade to my system. I already have solar. So yes, they all use Google to actually, at least initially, check your maps out. And they have some sort of program, which I want to get into what they're using. And maybe it's powered by Google Maps. I don't know. But they do use Google initially to check out your house, Google Earth and all that. So I don't know if they have to pay for that or as they get more into it, they get real-time maps. That's different. Like as it changes, then that might be a paid for service. But right now, I think they're using the free version for a lot of them.